with the audio right on, right on. Okay, so here we are with another stream. This is a different type of stream. Hopefully you'll stay tuned for everything here. Let me just share the good old screen. There we go. Ba 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 boom. That should be taking care of that. Alrighty, let's get started, everybody. Welcome to another edition of the CFD analysis. I use Oanda just as a cheap methodology to get an overview of the markets globally. All right, so right now in the US Treasury today is seeming to tank again. So why don't we take a look at that first? This is a 6-hour chart. Here you can see the, and this is just the CFD. So it did tank, as you can see here. It has tried to recover, somewhat recovered here in the 2-year, and now it's starting to tank again. Okay, so this is going to be a long-term thing. This is not going anywhere. So the short term is not looking good. 5-year, same thing. It has recovered maybe 3/4 on the 5-year. Now it's starting to tank again. That's what's killing off the markets. No matter what the Fed does, I really don't think it's going to matter because the pressure on the Treasury and the Federal Reserve, and just basically the US economy and the government, are probably not going to be able to save themselves. And the one thing a lot of these idiot politicians never talk about is the interest that has to be paid out on this debt. So essentially, it's like saying your grandkids are not going to eat, literally. Here you can see it. The 10-year looked okay. And now you can see it's dropping even more. And that's what people are more concerned about, is a 10-year. And then when you look at the 30-year overall, it's just been tanking since August. And that's when they started. And that's the long term. Like, this should, if anything, be increasing on this, but it's not. So that just goes to show you what's really going on in the States, that this should be at least stable. But that's a 30-year bond. So let's go back to our analysis here. All right, so as you can see here, we're dealing with a lot of shorts. Target price here lower than the current price with the harmonic scans. Nothing much shorts, long term that is. But here we have our USD Denmark as a potential safe haven. But look at here, I haven't seen this in a while. And you know that when things go crazy and you start to see a long for the gold silver ratio, something ain't up. So if it's at $65, target of $70, you can expect maybe a 10% correction in the market potentially. That's just me spouting out of what could be. Here we get more silver shorts in the silver, franc, and yen. You know, you're seeing more and more shorts, except here, this doesn't mean a lot. Euro in the Singapore, euro in the USD. This was originally supposed to show some long potential, but we got a short now. You can see between here on the 17th and the 24th, it was moving up, but it's come back down. So this situation is very serious. Hong Kong dollar, or sorry, the Hong Kong market's not looking good. You're always looking for a safe haven or something to get you out of this. Netherlands are down, Thailand's down, sorry, Taiwan. NASDAQ is short, pound against the Australian dollar, even though it's got again, this is just choppy, it's all it's saying. Australia, New Zealand's starting to move up. So those economies may be doing okay because they have commodities. And the New Zealand's probably got a decent financial balance sheet. NASDAQ, S&P 500 down, shorting, I should say, and the top 30 for the US, not looking good there. Brent crude is kind of flat. France got a short as well. Pound against the New Zealand. This was performing, but again, these are meaningless because they're just, you'll get a little bit of moves up, but overall, these are places I wouldn't put my cash. But as a barometer of when things are looking not great. You can see here, this is the usual one that I see that is moved into is USD in Norway. It has a long, but it's not yet bad enough for people to start piling in. But maybe later tonight, as this opens up, that could be possible in European time. The peso's up, USD and peso. Longs here now in gold and Swiss franc. Same with gold and Japanese yen. Here we have a second long on the gold silver ratio. I'd be more confident to see more of that. But I got to wait out a couple of days till it hits a certain point. I probably won't invest in this until there's a real calamity. But this is one of the other safe havens. But the one right now that's leading it out is definitely the USD Norway. Gold, silver now in Australia, 2 shorts there. Another short. We got one out of 3. Okay, 2 out of 3 shorts for gold, silver and Canadian. Canadian is not looking good at all. Another short here in silver and Swiss. So you know that's not a good metal to be in. Silver again in euro, 2 shorts. Well, mixed there between 1 long and 1 short. A long here in the pound. Doesn't mean a lot when you see these. Not necessarily. Gold, silver and Japanese yen is short. Yeah, a long here. Silver in New Zealand. Okay, so I do like the New Zealand dollar. I'm seeing more long in the New Zealand dollar, but here short now on the Australian New Zealand, so I'll wipe out the previous long. Again, same with Australian Singapore. Here's the interesting one. The Chinese 50 has a long. So obviously, don't wait out. It's not a confirmed reversal, but something to watch. France 40 has been moving up, which is not bad, but it has a short. Euro and Canadian's got a long. Here's a couple that I like seeing. The euro and Poland, surprise, surprise. That's actually moving good, or well. Euro and Poland. Here's another one, euro in Turkey. You would be like a bizarre trade there, but that's just showing you the uncertainty out there with the US markets. Euro and the South African rand has got a long. Let's see, more shorts on the NASDAQ, the Russell 2000. Here we'd be looking for a good one for USD and Hungarian, but it's got a short, did have a little bit of a run up. Here's the crazy one. Look at this, really strong performance for USD in Indian rupee, and it's just a sudden drop off. This is the unpredictability of this currency. Saudi Arabia, barely moving, nothing much there. More shorts on the SPX 500. USD 30 is not looking good. Again, a second call short on the Australian New Zealand. Oh man, so many shorts here. I could list them all. Another short on the S&P. Same with the 30. Okay, but you can see we're moving in the good. But it's so many shorts here. But like what I'm more concerned with is the US Treasury. But there, and it was performing really good. You see, it's moved up until the 24th, come back down, come back up a little bit, back down. So that means it's like a lot of downward pressure in copper. So when you factor that in with the Australian dollar, I mean, this is the nice thing about Australia. It has a very diverse mix of industrial metals. So here you can see that copper did recover a little bit, but Australia took a big dip there with the US dollar and is not really recovering a whole lot. But when you look at China 50, Maybe that's starting to recover. I wouldn't get really excited by that at all. And let's say the Hong Kong was the other one to watch on. Let's see here, HK 33. Again, but it didn't get hit as hard as the Chinese market. All right, so there's those two. Hong Kong dollar, but there's not much out there to save us. So going back to the Treasury, as I said, this is a real concern. This is the catalyst to watch when the markets will tank. Okay, so we have the 2-year, which should be giving out better. It's more risk, but the real fundamental one, when you see this downward trend on the 30-year for the USD Treasury, that's not a good sign, okay, because that's the overall confidence of the Federal Reserve on the US 30-year bond. So that's not good. We're starting to see, again, a dip here. Sorry, that's a 3-month. So yeah, so that's the 30. That's the 10-year. It's trending down as well. And remember, it's a CFD. You can see here, this big calamity here. It's starting to drop again. It's these large downward moves, like these big bars, and we're only at 1508. So these will continue. And that's why you're seeing the markets tank today. I will check the DXY. The 10 years just not looking good right there with those declines there. And then the 2-year big dip there and another new big dip here. So this is not very stable. On the 1-day, you can see here comparatively that the dips, you do see them. This is stable since August, but you see these big dips. So it's just, something's going to happen here. Okay, something's going to happen. If this continues, and then drops tomorrow. Yeah, we got to really watch this. These are the catalysts. This 5-year, that's on a 1-day. That's really scary when you compare it to other dips here. We had a big dip back in April. So you can see here, that's when the pandemic was at its peak right here. Let me just show you here. So this is where the real calamity started. But when the economy is doing okay, you'll expect to see the Treasury drop. But in here, when that pandemic hit, the safe haven was to go to the US Treasury, which it did, and worked the way it should. So this is before the Fed became a drunken sailor and started printing like crazy. So it's stable for a while and reflective of the economy. So it's stable between March 27th till about recently. And you can just see these big down moves. This one, especially last week, and we have another one here. And again, that's on the 5-year. So historically, for a day, like a daily bar, except here, but when you have these bigger ones, like you're going to see more of these. And I think that's going to spook the market. And if this continues, that's going to be the catalyst that'll bring down the markets. And I think that the government will not be able to do anything about it. They get talked $10 trillion package. It's going to make it worse. And here you go on the 10-year. Okay. So, just historically, like that shouldn't exist. And that's where it's too much debt. A 30-year, it's nothing but down. It really started back in August when they started printing money like it's no tomorrow. When you look at the NASDAQ 100, you could see, it's moving up, but it's just been this now negative downward pressure on the markets. And that's what's going on. All right, so if you like this sort of thing, just come over and you want some free trading secret books and all that fun stuff, just visit quantlabs.net. Also, if you want to get in on our private chat server amongst some sample code for the bots for either MotoWave or Python, you can go visit your quantlabs.net/DVD. And then, of course, the store as well with everything there. All right, thanks for watching. Have yourselves a good day.